It's Ed, and the future is now. And the future is here to tell you about the future 2021 portfolio, how we're structuring it, what we plan to do, the changes we're making from 2020 to 2021, essentially. We'll be covering a bunch of tickers today. And I just wanted to show you what our plan is, and we're basically taking a page out of Cathie Wood's playbook. Okay, we're snatching a page out of her playbook. Cathie Wood is the CIO and CEO of ARC Investment, one of the strongest ETFs out there. We've done a lot of research and studying her portfolios, her studies, her companies that she's investing in. And basically, we're trying to do a semi-model of that strategy this year. Okay, where we're going to be running companies about 2 to 10%, depending. Granted, we don't have a 10% maximum on a specific stock, so we may run to 15 or 20%, depending, who knows. But anyway, I wanted to get started. But before we get started, make sure this is the type of video that you want in the future, where going over multiple tickers, multiple stocks, and how much we've got in them, and when we're adding and when we're removing them. Hit the like and hit the bell notification, subscribe and bell, and that way anytime we post this type of video, it'll pop up on your screen and you'll be able to watch it. Free to do, but it definitely informs as many people as we can inform. All right, obviously, and this is why I have the SPY up, okay, the S&P 500 track, okay, and the reason I have that is basically, if the S&P comes down, it's probably going to drag your stock down, even if your stock is a great company or a great stock, or even moving at the time in the upward direction. So it's important basically to follow the S&P all the time, and the NASDAQ and the Dow. It's important to follow what they're doing, what's going on. Obviously, we have big things coming up, okay? We already had bank earnings week. That went off pretty successful. And then we have big tech earnings this week. So that's huge. We got Apple and Tesla and Microsoft, and we got Google the following week, and we've got Amazon. So, I mean, we've got all the big companies putting out information. So that's definitely going to move that's going to, whip the stocks around this week. Okay, and then we got healthcare, basically a lot of healthcare earnings coming out the following week in February, and a lot more other companies as well, some other tech companies. And then after that, the next week is a lot of more random tech and other companies as well. So you can see those boxes I put down just to kind of keep me highlighted of what's going on during those specific times. But you can see we're in an upward channel with the S&P 500. Okay. We're bumping the bottom, bumping the top, bumping the bottom, bumping the top. Now we're bumping the top again. It doesn't mean we're necessarily going to go back down to the bottom, but, it's got to be a factor to consider. So the issue is this, and how we're going to play our portfolio situation. We're going to trim back fairly heavily, maybe 25 to 50% of the portfolio. Like, we're running a huge percent right now, somewhere between like 80 and 95%. So that's a huge amount, but we're so diversified with different companies that we're hedging our positions, okay? But anyway, essentially, if the S&P starts cracking and starts coming down, then we will trim back virtually everything, unless the company is just not being affected. There's certain companies that just aren't going to care what the market does, and there's certain companies that are just going to get dragged down under the wave of the market. So and we will attack each company specifically. So anyway, that's the general strategy, okay, of what we're planning on doing for the year. So if we have a 5% or a 10% or a 20% drop sometime this year, which we're destined to have these drops, we want to try to avoid those as much as possible. And another thing is that we're picking a lot of good companies. We might not get hit for 5%. Let's say S&P drops 5% and we flatline to about -1%. Well, then great. We're basically, doing what we're supposed to be doing, which is beating the S&P 500. So if the S&P 500 moves up 5%, we're trying to move up 10 or 15%. So there's that. So that's one part of the strategy. Part of the strategy is this. We basically are setting a watch list, okay? And this is with actual stocks we have, and I've broken them down into groups. So obviously I have the Dow and the S&P, and I actually have the Ultra VIX, which moves opposite ×2 of essentially SPY, essentially. Okay, it's anyway, I don't want to get into that because that's not something that we're invested in. That's just that's a hedge situation in case the market's going down. We can hedge a little bit there, and so we're not losing as much money on the downslides. But anyway, I can get into that later. But anyway, we have, let's say, the top 5 invested, 6 through 10 invested, 11 through 20. And 21 through 50. So we're saying that basically what we're doing is these stocks will go up and down based on how they're performing over the time frame for this year, so basically they might be adjusted here and there. And that also, the strategy is really this. I mean, we basically, let's say, start with a base of 4,000, okay? And then each company will be an equal weighted 4,000, okay? So if it's underweight, let's say half underweight, then it would be at 2,000. If it was 150% or overweight, it would be, let's say, at 6,000. So, or double the weight, it would be at 8,000 or whatever. So basically we're running, we're starting positions on potentially even at 25%, even at 1,000 or at 2,000. Or 3 or 4. So it depends on, where the chart is, where the technical analysis looks for the company right then at the moment, okay, depending on when we get in, because I don't want to just jump all in if we're toward the resistance levels or towards the top of a specific company. So that is basically, I'm laying that out, and you're going to see these moving up and down potentially all year on my list. So this is just happens to be where they're at now. Obviously, you guys know I'm a big fan of Tesla and Apple and Net, Palantir, NEO, NNDM, DDD, Crispr, Silvergate Capital, and those are the main ones that my top 10, not really my top 10 for long term necessarily. It's just in this situation right now, those are, some of the ones I'm going to be holding a lot of. Now, Tesla going into earnings, for example, maybe, I might trim down before earnings, or Apple I might trim down or add before earnings, depending. Most likely, it just depends on the situation. I'll get into that on specific stocks, but I didn't want to, because they all act differently. Okay, so you can't just blanket one tactic for every stock. It just doesn't work that way. I mean, and the healthcare stocks work differently. Biotechs work differently. Small cap, we have a lot of small cap, but we have a lot of big cap too. So anyway, that's the third part of the strategy is we're setting up, we did all the research, and now we have our shopping list and we started buying. Okay, and I'll show you our performance already, which is pretty strong for the year, actually. So it's putting me off to a good mindset that maybe that this is a good strategy, and we will work to fine tune this to the best of our abilities. And this is pretty new to me because I'm, like I said, last year we basically had 50% Tesla running, which, proved to be a good thing. But in general, we don't want to get in the habit of just having just one company, over time. We want to get in the habit of making 50% a year, every year, indefinitely. Okay? That's the winner. That's when you become a winner financially, is when you keep cranking in 50% plus every single year. Okay? So that's our general strategy on basically what we're doing, and then I'll get into all the specific stocks and show you how it kind of breaks down. It's been a huge performer. Our number one performer over the past almost 2 years now, a year and a half. And anyway, right now you can see it's flagging. Okay, you can see the flag out here, which basically it spiked up to 880, and then it's basically been moving sideways for the last 2 weeks. So essentially, on the 11th is when we started essentially the shopping list purchases. We started buying in, and getting our feet wet on the new strategy. And you can see Tesla's pretty much just gone sideways, so it really hasn't gone anywhere, a little slightly down. But in general, it's flagging out, waiting for earnings. Now, you'll see the little box that I usually put up here. And what that is a note that I note basically when the earnings day is. It's crucial to know when the earnings are. So it's Wednesday, 4:05 is when they'll announce their numbers, and then they'll do an actual presentation right around 5 to 6 usually. So anyway, that's Tesla. Tesla's normal weight for us right now. I mean, it might be anywhere between 75% weight to 200% weight, depending. If it breaks this flag and breaks up, it's going up to, will probably be somewhere close to 150 or 200% of the weight in a given stock for Tesla. So anyway, that's pretty much the situation. Now, if you were thinking, oh, should I buy before the earnings? I wouldn't suggest anything. I mean, we wouldn't personally do that. We're not personally adding going into the earnings. If anything, we might trim back slightly, so that way, if it takes a dip, that we don't take a huge hit financially in it. If it does, I mean, if it goes up, great. Well, then we're making money, so no problem. But we're just just being cautious, before the earnings, because the earnings in historical earnings, if we go back just even for the past year or so, where are their earnings here? Let's go back. Okay, last earnings, they beat their earnings. Everything was good, and they went down for about 4 or 5 days in a row. Let's see, before that, their earnings were solid again, and they went down for, well, almost sideways down for almost 2 weeks or more. And then after the earnings on 4/30, they also went down pretty hard for 2 days in a row, and then snap back. And then we remember the earnings way back when, back in early 2020, where they spiked and went up and ran up into that exponential curve and got slammed with pretty much everybody else investing in Tesla at the time. But it was fine. That wasn't too punishing. So anyway, that's just historically speaking. It's, low likelihood of the stock just blasting off, but I'm not saying it's not going to. I'm just saying, based on a percentage and a probability, it's not looking great, specifically to me. So we're not going to be heavy, like 200% or overweight on what we're doing for Tesla. Apple, I knew Apple was going to have a breakout. We've been waiting on this for a while. And it's finally making a good solid breakout. You can see this is back in September when they had the split, and it finally is breaking out up here, which I like it right at the moment. Granted, it's towards resistance at the tops, but if it can break above this, and if Apple crushes their earnings, which I would expect them to, but if they do, then it can push higher. If not, so be it. But we're definitely about normal weight in Apple. Let me double check. So what I can do here is I can go up here on my list and pull up Apple, and we are up 2.56% on Apple, $153. We have $6,000. So we're overweight on Apple currently. We might remove some of that and bring it back down to about 4,000 before the earnings, potentially. We'll see if it ramps up even further into earnings on Monday, Tuesday, or Wednesday, or a combination of any of them. So anyway, that's the story on Apple percentage wise. So that was good. And let's go back to Tesla, because I didn't show you where we're at. So Tesla, we are down $100, no big deal, down 3.75%, so very mild. CLOUDFLARE, love the company, love the trend. Okay, let's move back. Take a look at that trend. It's a monster trend. The company could potentially go profitable here. I definitely won't be cutting any net shares going into earnings. No chance of that. So I'm going to leave net running. It's already moving up for us, and we're in currently at about 81. We've been trading this in and out here and there in the past, but we're currently in 81. It's approximately 83 plus, so up a minor percent. Net is not really making a big charge right now, but it's one of my big stocks for 2021. I'm a big believer in this company for 2021, and the charts are solid. It had a good correction here, and now it's moving higher. It's above the 20, above the 50, above the 200-day, way above the 200-day moving average. So this company is pretty solid. I will watch them closely, though, and if they break down on this is like a rally trend. So if this rally trend, they break down on this rally trend, then we may adjust it at that point, may even reduce the weight. So let's take a look at the weight on net. Let's go to N for net. Net, we're up 2.45%, very slight, $103. We have 4,300, so we're basically spot on for where we want to have it as far as equal weight in the portfolio. Palantir, holy cow. You guys know I'm a big fan of this company. We already made a huge gains on this company of about, wow, I think this was 100 or 150%. I can't remember. We got in a little late, and then sold out, and then bought some more, and then sold out. So I think it might have been around 88, 90%. I can't remember, but we've already made a great score on Palantir. Actually, no, it's more like 150%. But anyway, so it's been flagging out for a long time, okay? Didn't cut it this time. I was like, okay, let it hold. As long as it keeps holding that 23, 24, you know, I'm good. And sure enough, boomtown. It went up like 25%, 25.40%. Crazy move. That is huge. So, and what we needed to do is basically break 30, retest 30, and bounce off and head up. Grind higher. So this is pretty big. Obviously, they're going to explain all of their Gotham and Foundry and all of their different software platforms. They're going to explain in detail. So there should be a lot of news and media and hype around this as well. And I'm just a big believer that this is going to be a huge company in the future. They're already pretty big. I mean, the market cap is like 40 billion already. And they get government contracts, and they get military contracts, and they get corporate contracts. So they're global already. I love this company, and it's finally making a move. Let's see if it can hold this move. So, and this is a big one. Let's see what we've got for riding on Palantir. So Palantir, which is PLTR, we're only up, believe it or not, because it's been going sideways, we're only up 6.92%, okay? Because we've been holding it. So up about $300. We're, you know, maybe about 120% weight. So a little bit overweight on Palantir. Big move. I mean, yeah, I mean, we made 1,000 just the other day on Friday on that move. That was a pretty big move just on this account. Palantir is one of the ones, the core ones like SI or Tesla or Apple that we have in almost every account. So that was a big move for Palantir on, you know, probably the biggest day change that we had on Friday. Yep. Palantir made 25%, followed by NNDM at 14%. So a pretty big move for Palantir. So I'm a big believer in it, and I told you guys a few videos ago, this is one of my big ones for 2021. So keep an eye on this no matter what. Okay, NEO. NEO's solid. I mean, NEO's one that I basically missed in 2020. Okay, it had a huge move up in 2020. Basically from, I think, under $5 a share. Yeah, around $2 in 2020. Yeah, and it had a massive move, but I missed out on NEO. Am I regretting it? No. Why? Because we had Tesla. So, I mean, yeah, should I have had half NEO and half Tesla or something? What's the difference? Okay, they both made massive moves. So I'm not regretting it, but I'm also not alienating it for 2021. Okay, and Palantir looks Palantir. NEO looks pretty good. I've still got Palantir on my brain. Okay, I love the company. But anyway, NEO is moving pretty solidly, meaning it bounced off the 56 over here. You can see that previous top over here, and that's big, and it's moving higher. It got an upgrade, and it's looking pretty strong. I mean, it's still, the market cap's still pretty high, but I think we still have some room to move potentially in NEO. I'm going to be following it closely. And anyway, let's see where our rate on NEO is. Where are we? So we have 4,000. So we're equal weight on NEO, and we're down slightly. I think. Oh my gosh, my purchase time was just super off on NEO, and I can't remember if I was trading it or doing anything before, but it was definitely off. I bought it when it was ramping up, and I really just, you know, that's just when we happen to jump in. Bad timing, no big deal in this scenario, okay? So I'm not too worried about it currently, and, you know, I expect it to get back to 65. I mean, if it gets back to 65 from 62, we're even. So no worries on NEO. So, I mean, and once again, I think it's right now, technically, if you look at it, it's the second best EV play there is right now, okay, next to Tesla. So, I mean, I don't know any other company that's producing EVs out at this scale, okay, and that quality. And that's all that the company does is make EVs. So, I mean, as far as I'm concerned, it's the second best EV company next to Tesla. So I'm obviously going to keep an eye on NEO as well. NNDM. Okay, Nano Dimensions. Okay, this is a 3D printing company primarily, and they're on a supercharge. This is one that we're really up huge on. Our timing was good on this company. We got in right around 940, 948. So really good move. We're up almost 50%, I think, already. And that's been 1, 2, 3, 4, 5, 6, 7, 8. Basically about 8 days. Up 50% in 8 days. What a move for Nano Dimensions. And it's still funneling up. You can see it funneling up here in the megaphone pattern. And so it still has some room to run potentially. It doesn't mean it can't come all the way back to the uptrend back at 11. I mean, that would be a pretty big hit if it does. So we're going to obviously watch it closely, but you can see the volume's pretty solid. We've got a lot of green across the board, a few red to be concerned with, but in general, I like this, and I like 3D printing for the next 10 years. So it's going to be a company that I'm going to be watching consecutively for a long time to see how it plays out. Doesn't mean we're always going to have it, but for the most part, potentially yes. So we'll see how we can move here. And honestly, I wish I had gotten into it earlier, but it's just I wasn't introduced to it early enough. So, but it doesn't mean I'm going to disregard it just because it's up. Okay, it's already went from 9. Remember, it's a pretty small cap stock. Let's take a look and see what NNDM is. It's only worth 1.8 billion, which it's still relatively small. Okay, 2 billion versus Tesla's 800 billion. Yeah. Well, I mean, not to compare it to Tesla, but just to compare it to a big stock. Okay. So, but anyway, so 3D printing is definitely going to be a big part. And we are currently 150% approximately overweight. We're already up 51%. It's probably our biggest gainer right now. To date, as of 11 days, or I'm sorry, since the 11th, which is about 8-9 days, we're up 52% on NNDM. Massive move. So we're watching it closely. We don't want to bleed back a lot of those gains and just have it lose 50% right back. And, if it starts, looking weak, we will trim it down, let's say to 100%, to 75%, to 50%, to 25%. That way we're capitalizing on as much of the gains as possible. I mean, we started it at essentially somewhere around 3,800. We've already made 1,900 just in this account. Once again, NNDM is in almost every account that we have. Almost. I think there's a few that it's left out of because it's such a small cap. So anyway, that's my play on NNDM, but we're also doing DDD, but I'll talk about that later. They say DDD, holy cow. What a move. I'm going to pull the 5-minute. This is one of my daughter's favorite because we were watching this the other day just blast off. And I was like, okay, I got to get the info about what was going on. So what happened with DDD is this, and this is what is making it still charge even after going up almost 100% in a day, okay, is that essentially they got out of debt, okay? The whole company has basically got out of debt, and they didn't have to do a capital raise on top of it. So you're like stacking two massively important things for a company like right on top of each other. So, and it just blasted, and we were watching this. I'm going to have to zoom it so you guys can see it. In case you didn't actually see what happened to DDD when it blasted off, I'm going to show you directly. It was pretty insane. Okay, and we were basically watching this almost all day that day, and I was like, where can we get in? Where can we get in? But it literally blasted from 1242 to 14 in 5 minutes, and then, which is a huge move percentage-wise, and it blasted off just 5 minute by 5 minute, just grinded higher, leveled off, and we actually bought higher. Look, I didn't even buy during this. I actually bought above this, and you'll see why if I zoom out again. And let's go to the daily, actually, and that'll make more sense. Okay, so it's blasting, and go. Okay, this is heading up this up channel. So we got in the minute we started seeing a little bit of a dip almost, we got in, and this company is still blasting off. So we got in right around 27. It's already at 34. Let's check the percentage on that one. that was a good position. I just wanted to start a position on it, and it turned into 27.77% within a very short period of time. I think it was like 5 or 6 days. So, I mean, that's a really great move on that one. Net gain of about, net gain of about 1,300. So we're now 150% weight on DDD. So I am going to watch it closely, because if it wants to bleed, it's going to want to bleed potentially fast. But I think that the news, if you look at the volume, let's pull that up again so you can see. Volume is super strong. So very, very small red sales and a lot of green. So this company still, I don't see any weakness currently. Doesn't mean I'm not going to be watching it like a hawk every day. So, but that's another great 3D printer play. Okay, they're basically the biggest 3D printer company, I think, as far as I'm aware of. And there's the Stratasys and a few other companies. NNDM is a very small company, market cap, comparably speaking. So anyway, that was a huge move on DDD. So obviously 3D printing went gonzo this week. CRISPR Therapeutics. Now this is one of the genomics plays that ARC and Kathy Wood, big fan of CRISPR. They've been raking money off of CRISPR for a while now. So really good call for Kathy Wood on CRISPR. It does have its moments of kind of, coming back to reality. You can see those dips here. And but right now, currently, it's hanging. As long as it hangs that uptrend and starts heading up from here, it's above the 20, above the 50, above the 200, then I like it. We're a little high. We have a small loss in it right now, but not much. So not too worried about it. This is actually probably a great long-term play to get into the genomic space. SILVERGATE Capital, you guys know I love this company. Basically, it's a blockchain technology company. I think it moves up and down due to Bitcoin moves too. So there is some Bitcoin risk with the stock, but I've been tracking this stock all the way back. Let's take it back to the IPO. The IPO, it came in at about 14 and it spiked up and just couldn't cross that 16, 17 level for a long time. Dipped down to the market and finally it blasted off. And we got it fairly early, right around $18. And we had a huge run on SI, 150 to 200% run. And we've been buying in and out of it. So, but it was one of our highest performers for the last few months. But now it's looking good too. So had their earnings situation, and they actually did a capital raise, I believe. And so it's had a lot of good buying bars. You can see the 2 green bars heading up, and it's hitting resistance a little bit. But once again, if it can hop over 80 or 77, it can move higher from here. So this is one of the ones I'm going to be holding for 2021 for sure. It's only a couple $2 billion market cap. Or actually, let's take a quick peek at SI. SI is at 1.2 billion market cap. So still super small market cap. And let's see our percentage. Portfolio base on SI is 6,000. So we're 150%. So we're overweight on SI and up 6.55%. So, but it's finally breaking out. We've been holding it and it's finally breaking out and looks pretty good from here. And B, okay, this is one that I wouldn't have got into at the IPO. I didn't get into at the IPO actually, and I basically waited, set it on my algo on Blaze Capital. Thanks to Justin, Matt, and the team at Blaze, we made a huge percent on this move, and I would never have touched this. I would have waited a lot longer, but the algo triggered for. And we jumped in on it. So you definitely have to go. This is my #1 source of reference. So, and if you ever want to contact me or chat with me, I'm chatting on Blaze's stream at noon at 4 p.m. every day. Okay, Monday through Friday. Okay, and then they have weekend streams as well where they do updates on the whole market for the following week. I just actually got finished watching one of the videos before I started making this video. Okay, so I'm a prime believer in their platform, in their algo, and it is completely worth it. I mean, it has already just paid itself off times 10. I don't know how much, and I wouldn't be able to figure that out, but it's been massive. So, but anyway, talking about Airbnb, this is one of them that, once again, I wouldn't have got in. We got in about 149. Let's take a peek, and it's blasting off. Let's go to Airbnb. Airbnb, we're up 22% in less than a few weeks off of Airbnb, and I never thought I'd get into it right away. So huge move. Where are we at? Let's see. Yeah, so we're slightly underweight on it right now, but a big move in general on Airbnb for the past, about 2 week span, 22%. So it only went up 0.8% on Friday. So small move on Friday, but it's been crushing it. And so we're going to keep an eye on it. Let me pull it back up here and pull the chart up. And it looks like, again, it's trending up. So this is pretty huge. As long as it keeps trending up, if it hits towards the top of the to the uptrend, then we'll see from there. But right now, there's no warning signs on Airbnb. So that's our scoop on that one. And got to thank Justin for that one. All right, take care, buddy. Walt Disney Company. I love Disney for long term. I mean, this company is planning to beat Netflix, okay? And by, I think, 2023, 2024, they're trying to hit over 200 million subscribers. I think they already have 100 million or 89 million or something crazy. So, and they're trying to produce a lot more content. So we do have a huge gap in the chart that I'm a little worried about. It would have been nicer if it would have backfilled that gap and then moved higher to 157 up. But right now we're in Disney, and I just think in going into earnings, I don't think we're going to do anything for Disney either way. Let's see what weight we have in Disney. It's not a huge weight. But anyway, I just believe in the company long term. Let's see. We have about 75% underweight. So, and it's down slightly, 2.87%. It's kind of going sideways. But anyway, like Disney, it's more of a hedge, a long-term play. Into some lithium, LAC, or LAC Lithium Americas Corporation. Okay, I talked to you guys about this a few videos ago about the fact that we're moving away from oil and gas and moving towards nickel and lithium for batteries, okay, for the EV movement. Okay, and just moving towards electricity in general, batteries going to be huge. Okay, we got in really strong in this one at about 1850 or so, and it's been ramping up. It blasted off, came back to earth a little bit, but it's still hanging that uptrend. So I love the situation, and I love, betting on the future. And this is one that we're betting on the future. We have a bunch of clean energy stocks in place. Okay, there's a little worries on the volume, a little bit of red volume here. So we got to watch out for this one specifically. So anyway, let's see what LAC is doing for us right now. LAC. LAC is crushing it, up 25.3%, and since the 11th of this month. And our position dollar value, it's about even now. I mean, we were a little low on the position value, and now we're dead, normal level. Okay, and pretty strong in general for LAC.
We're going to space!
Yeah, we're definitely going to space, and we've been going to space for a while now. We got into this early. My wife caught at the IPO, and we basically been tracking it. We blasted off like 200+% in the first move, or 12,000 there, plus another 1,000 in July, plus another 1,000 in November, and we're doing it again now. So we're taking advantage of all those dips and capitalizing. So this is probably our best trading stock that we've been hitting. And if it breaks above the 34, 35 levels and back test, and it gets a massive short squeeze, we could potentially move pretty high. This is also a company, this is where I found Blaze, because Blaze was doing massive research, Justin, on Blaze Capital on this stock. And then we were basically sharing some data, and we both capitalized heavy on space, and we've been tracking it ever since. And that's where I found the channel. Thank God I found the channel. I got to kind of thank space for that one. But anyway, Virgin Galactic, we don't know exactly what they're going to do, if they're going to disrupt the entire airline industry or not. But bottom line, the stock looks pretty good right now. It's flagging up with a bull flag, and it looks pretty good. It's got a pretty sizable gap in the chart But in general, space looks pretty good. Okay, fun utility vehicles. This is one where I just made the worst mistake. I mean, totally. I saw this company and I was started tracking them and I saw them at $1 a share and I just was just too afraid to just throw 1,000 at it and go. And if I would have, it would have been worth $20,000 on ARCIMOTO today. So big mistake. I missed that. I missed the pump up in November as well, where it blasted off from like 6 to 20. So I missed another huge move. And we're in now, and I'm fine with it because it broke up. This is a bullish pattern. Everything looks pretty solid here. And we had a day that it went up like 25%. So let's see where we're at on FUV even now. We're still up 16.5% in less than like 8 days. So it's still pretty strong, and it was down 483 just the other day, but it's up pretty big for us right now in general. So it's overweight right now, but we're going to watch it closely and see if it has the ability to ramp up at all. So anyway, that's FUV, and I mean, I just totally dogged it on that one. I have to admit it. I could have been in a lot earlier on this stock and really benefited from it, but it is what it is. I'm not perfect, and you know, nobody is in the market. Now, I wanted to do more since we ran the video about 35 minutes. I'm going to cut it here, but if you want me to cover more stocks that we have in the portfolio next time, smash the like and we will do all of the stocks. But I definitely wanted to give you an idea of what we're doing with the portfolio and how we're kind of managing it now. Okay, and I'll give you progress reports, updates on, you know, to see how we're doing. Okay, watch out this week because we have a huge earnings week, so be super careful when it comes to investing, especially before Wednesday, okay, with all the big caps coming out. So anyway, take care and have a great weekend.